Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Yesterday we saw a great recovery coming in from the day's low, and we did manage to hold on to the 25,700 mark. Today, 25,600 on the downside will be crucial. Yesterday we came very close to violating that level, but thankfully, we managed to hold on to that. And thanks to the Nifty Bank index, we saw a good recovery. Because banks clearly held the fort, and ICICI Bank being the top contributor to the Nifty Bank Index, which by the way ended the day in the green this morning. The texture of the market, the global markets is fairly mixed. Wall Street kind of retreated from record levels. Asian markets are mixed. Some of them are mirroring the losses that Wall Street saw overnight, but the Nikkei deserves mention, the Nikkei, so to say, the Japanese markets, because they have staged a very good rally. The Nikkei index, in fact, crossed that 54,000 mark for the first time ever on the hopes of snap elections in the country. So yes, GIFT Nifty on the other hand hinting at a muted start, negative start, and remember it's back-to-back expiry day. So yes, there will be a fair bit of jitters today as well. Yesterday a lot of the volatility was attributable to the Nifty expiry, but today it's the Sensex expiry given the fact that tomorrow is a holiday on account of the BMC elections. Lots to watch out for. Infosys will be reporting numbers post market hours. We'll take stock of that. Tata Elxsi came out with numbers post market hours yesterday. It will be reacting to that, so we'll take stock of these stocks. We'll also be considering all your stock related queries. Keep them coming in, we'll get them addressed as well. But before we move any further, quickly take a look at the top headlines at this hour. Wall Street retreats from record with S&P 500 drifting lower, dragged down by banking stocks. Markets in Asia open mixed. Nikkei hits a new high, crossing that 54,000 level for the first time ever. The GIFT Nifty meanwhile is indicating a sluggish open for D Street. Crude surges to 12-week high as geopolitical risks boost concerns about supply disruptions. Meanwhile, both gold and silver hit fresh record high as US inflation data cements Fed rate cut bets. IT major Infosys is set to report its third quarter numbers today. Profit after tax seen up 1% on a sequential basis. Constant currency revenue growth is likely to be expected to narrow its FY26 revenue growth guidance toward the upper end of 2.5% to 3% on a year-on-year basis. US Secretary of State Marco Rubio and External Affairs Minister S. Jaishankar hold a phone call to discuss next steps regarding bilateral trade negotiations, critical minerals, and a possible meeting next month. All right, those were the top stories at this hour, but quickly taking a look at what really transpired in the session yesterday. Markets closed largely in the red, but sharply off the day's low. The Nifty managed to hold on to the 25,700 mark, and thanks to a good recovery coming in financial shares. Even though the Nifty ended off lows, nearly 30 out of the Nifty 50 stocks ended the day in the red. Defense stocks fell the most. The likes of Solar Industries, Zentech, DCX Systems, all of these stocks were under pressure. GTPL Hathway deserves mention because that stock fell 22% from its highs, and that despite the fact that the company reported steady set of numbers. Lots of other stocks were in focus, but index heavyweights came under pressure. The likes of L&T, Dr. Reddy's, Reliance Industries, all of these heavyweights were under selling pressure. In terms of foreign investor inflows or outflows, so to say, FIIs were net sellers to the tune of 1,500 crore rupees, but some bit of tempering coming in when it comes to the sell figures. So one should take heart from that. DI net buying continues. 1,100 crore worth of stocks bought in the cash market. The put call ratio dropped to 0.86 vis-a-vis 0.9 in the previous session, and two stocks continue to be in the F&O ban, the likes of SAIL and Sammaan Capital. They have been in F&O ban for quite some time now. But to understand the texture of the market for the day, let's bring on board Ruchit Jain, Motilal Oswal Financial Services. Ruchit, lovely chatting with you this morning. Back-to-back expiry days doesn't really happen very often. Do you expect the markets to remain sideways, or do you see some pressure, or would you say that the recovery that we saw in the last hour of trade would pick up here on? What are your thoughts about how we are poised for the day?
Yeah, hi, very good morning, Nandita. So if you look at last 1 week, what has happened? Firstly, the markets breached that important 50-day EMA support, which since the month of October, on every correction, the 50-day EMA was acting as a support. But post that, the market breadth has definitely turned negative, which is not that good sign. And hence, we expect the market to trade within a broad range itself with some higher volatility. On the high side, now the resistance is around 25,850, 900, which needs to be surpassed for any kind of positive momentum to kick in. But yes, last couple of trading sessions at lower end 25, 400, 450, we are witnessing some pullback move. Even day before yesterday, markets witnessed a good up move, almost about 300 points. Nifty rally was seen from that lows. So this clear indicates that the markets have formed a range where at higher levels 25,850, 900 is acting as a resistance, whereas somewhere around 25 400 to 350 there's a good support where buying interest is seen. So we do not expect any run up move happening soon. Within this broad range, I think markets volatility would continue. I think the focus now for short-term trading should be more on sectors and stocks which are showing a relative outperformance in such markets rather than expecting the entire index or the market to take any single direction.
Okay, that's the view. But is the setup looking better when it comes to the Nifty Bank Index, because that has been consistently outperforming, and yesterday, thanks to a recovery in some of the banking shares and of course entire financial basket, so to say, we saw the Nifty as well cutting some of the losses. But where are you poised? What are the levels to watch out for on the Nifty Bank Index?
Yes, certainly. I think Bank Nifty is much better placed than what we are witnessing on the Nifty. So on the lower side, the index is a good support around 59,000, where this index has not yet breached its 50 EMA support level. So and we can see that the heavyweights such as ICICI Bank or SBI, which is SBI is trading around its all-time high, irrespective of what the correction that we have seen in the markets in last 7, 8, or 10 trading sessions. These heavyweights have not seen any kind of no downtrend, and also the kind of uptrend that the certain mid-size private sector banks have seen. I think that would continue to show some good momentum on every declines. Buying interest would be there. So we expect the downside would be limited in the bank nifty, and at any lows in that range of 59,000, 59,200. The index should find a good support. The 50 DMA is placed at 58,900. So till on a closing basis for the short term, 58,900 is intact. I think nothing much to worry about on the Nifty Bank Index.
Nothing much to worry about on the Nifty Bank Index. We'll talk about IT in just a bit, but just about 3 minutes to go for the markets to open. Ruchit, any recommendations you would like to make for our viewers this morning?
Oil India is one stock which we have recommended yesterday to our clients as well. So Brent crude oil prices have seen an up move in last few trading sessions. So direct beneficiary comes as upstream companies where Oil India has given a breakout yesterday with very good volumes. So I think from a trading perspective, we expect levels around 480, 490 on Oil India. So at current levels, one can create fresh long positions in oil with stop loss below 430 for potential targets towards 490.
Okay, Oil India. That's the recommendations coming in from Ruchit. But Ruchit, ONGC was also fairly upbeat yesterday. Any thoughts on where it's headed? Any kind of level that you'll watch out for, and what is the strategy one should adopt on an ONGC?
So I think we already have seen a good consolidation in ONGC too. A good time-wise corrective phase has been seen over last 7-8 months, and we could see some positive momentum there too in the near term. So ONGC on the high levels can see levels towards 260, and good support is there around 232. So keeping us 234. So keeping a stop loss below 234, one can expect 260 levels on ONGC.
Okay, those are the levels to watch out for on an ONGC. Okay, just about a minute to go for the markets to open. How would you be positioned on an Infosys? We'll talk about the expectations in just a bit. Yesterday, IT did end the day in the green, but we had stocks like TCS, HCL Tech reacting to numbers. HCL Tech ended in the red, but TCS managed to end the day in the green. Within the three, or among the three, Infosys, HCL Tech, and TCS, what is the positioning like?
Relatively, I think HCL Tech looks better. There has been a good relative outperformance in this. a move above 1700 could trigger the next leg of uptrend in the step. So I think if overall IT space still looks positive, the downside seems to be limited. Infosys, one can wait for the results outcome to come, but no, HCL Tech, and if I add one more, then Tech Mahindra is another stock where technical structure is looking bullish.
Okay, that's the view. Those are the stocks where things are looking better on charts within the IT basket. Let's take stock of the market open then. Negative start, of course. 85 points down on the Nifty. 25,650. We are around about that level, but 25,600 will be crucial to watch. If that breaks, then the recent swing low that we made on Monday was somewhere around 25,473. Perhaps that would be one crucial level to watch out for on the index. Nifty Bank Index is relatively outperforming today as well. It's extremely flat at the current juncture, just about breaking into the green as we speak. And if you look at the Midcap Index, it is moving very much in tandem with what the benchmarks are doing right now. Breadth of the market remains skewed in favor of laggards, so not a good sign. But yesterday, even though the breadth was fairly poor, in the middle of the day, we saw a good pickup or improvement in the breadth as well. So let's see how things pan out. But right now, things aren't looking all that pretty when it comes to the broader end of the markets or even the benchmark indices. But in terms of sectors, let's see which are the pockets that are managing to hold out. PSU banks, yesterday this sector was also among the top sectoral movers. Today again it is taking the lead, 0.3% kind of gain on the Nifty PSU index. Metals as well holding out, mild gains, but metals holding out and trading in the green. Real estate continues to be one pocket that that has been witnessing incessant selling, despite the fact that 2025 this particular pocket saw very severe selling, and it continues into 2026 as well. Autos, another one. That's another sector that's trading in the red. Of course, yesterday as well, autos ended the day with losses. FMCG, Pharma, all these sectors continue to be in the red. In terms of the stocks on the large cap front, ONGC once again extending its gains, top Nifty mover. 260 was the level that Ruchit mentioned. The stock is around the 246 mark. Coal India, NTPC, some of these power and metal names also doing well. Infosys, ahead of numbers, is fairly upbeat. It's up 0.5% or so. HCL Tech yesterday ended the day in the red, but today some bit of rebound coming in there. Hindalco, Bajaj or Tata Motors, although the Nifty auto index is in the red, some auto names are among the gainers on the index. HDFC Bank also trading in the green, and ICICI Bank, that was one of the top contributors on the Nifty Bank Index yesterday, is extending its gain. ITC and Bharat Electronics, both these stocks trading in the green. What's not doing well? Aisha Motors, Max Healthcare, even Asian Paints, that has been an outperformer in recent times, seeing some selling pressure. Wipro from the IT pack under pressure, Ultratech Cement, Power Grid, Interglobe as well extending its losses, and Reliance Industries also under pressure. Mind you, some of these heavyweights have come under some bit of selling pressure, profit taking, etc., and that continues. And Eternal is another one that is trading in the red after the kind of gain we saw yesterday on hopes of higher MSCI weightage. The stock was upbeat yesterday. We'll take stock of the mid-cap gainers, losers in just a bit. But Eternal, any thoughts here? Ruchit, yesterday we saw a good up move, but off late, Eternal has been witnessing profit taking. How would you look at the stock now? Would you expect the stock to hover around the 300 level, or would you see some bit of correction, further correction, and perhaps 280 kind of levels on the downside?
So I think we have already seen a good price-wise correction from that high of around 360, 365, which it made in mid-October. And now the stock is hovering around its 200 EMA. So we might see the stock entering some time-wise corrective or consolidation phase, where 300, 310 on the high side would remain a resistance, and 280, around 280, 275 the support zone is placed. So I think price-wise downside seems to be limited over here, but not expecting any significant uptrend over here as well. So some time-wise correction or consolidation could be seen in Eternal.
Okay, that's the view on an Eternal. But let's shift focus to Tata Elxsi. The company reported numbers yesterday. Profit slipped around 30%, but revenue rose 4% on a quarter-on-quarter basis. Margins were also higher at 21% vis-a-vis 18.5% in the previous quarter. How would you look at the stock? Because it's under pressure right now. Just want to see what the price action has been like in recent times. But any thoughts on some of these mid-cap IT names? Tata Elxsi in particular, just trying to open the chart. As I said, it's trading 1.5% lower. I think it's reacting to the kind of drop it has seen in profit despite an uptick in margins. What would you do with the stock post numbers? Almost 2% down right now.
So before the numbers itself, we had already seen a pullback move from the lows of around 4,900 in the stock. So clearly indication that some profit booking has been, we are witnessing some profit booking post the up move and post the numbers. So I think in short term, we can expect a bit lower levels around 5,500, 5,400, where the 20-day month for support for the stock is placed. I think within the IT names, we would prefer more going with the large cap names such as HCL Tech is there, even TCS broadly it seems the downside would be limited. Tech Mahindra we spoke about where the technical structure looks quite bullish. So we are preferring more of the large cap IT names for now until we see a broad-based rally in the IT names rather than going with the mid-size names.
Okay, prefer large cap names like HCL Tech vis-a-vis mid cap names. But let's take stock of Just Dial numbers as well. Profits were down somewhere around 11%, almost 11%. Revenues were up 6.5%. EBITDA margin was up at 31.1% vis-a-vis 30.2%. In fact, we had a report, a buy call coming in from Citi on Just Dial, but the target price here has been cut to 1,000 rupees. Of course, the stock is very close to its 52-week lows and has seen quite a bit of a correction. If you look at the last 1 year, the stock has dropped somewhere around 20%. But in last 1 month, we have seen the stock trying to make a comeback. Very mild gains, but still there was some kind of a pullback that the stock was attempting. Feeble attempt, but do you think that could happen, or would you see more sell-off here on? Because Street doesn't really seem to be very enthused with the numbers any which ways. So where do you think the stock is headed?
So broadly, the stock has shown a significant underperformance. If you look at last few months, since the month of April itself, we witnessed a pullback move towards April around 1,020. But then the low top, low bottom structure has consistently been there in Just Dial. As of now, still there are no signs of trend reversal. So even when the markets were showing strength, where the mid caps, small caps had seen a pullback move, we had not seen participation from Just Dial. So a relative underperformer. So better to avoid any kind of bottom fishing here.
Okay, avoid bottom fishing in a Just Dial. But let's also take stock of Thomas Cook. The stock is in focus as it has signed an MOU with the Gujarat government to boost tourism. How would you look at some of these travel tourism names, especially Thomas Cook? Of course, in terms of aviation, etc., we've seen Indigo that because of the crisis, it got hammered and then tried to make a recovery, but once again, it has come under selling pressure. Within the travel tourism basket, aviation, of course, we don't have a lot of listed players there, but Indigo and Thomas Cook that I mentioned, the stock has literally done nothing over the past 1 month, and it has of course been under selling pressure as well, around about 140 or so. So any thoughts on some of these stocks and what one should do with them?
So I think travel and tourism as a theme, it has taken a backseat for a while. Last 2 or 3 months, if we see whether it be hotel space or any other stocks, we have not seen that kind of trended phases coming in on the positive side. So I think at least from a near, although the mid to long term structure, one can look for selective stocks, but at least from a near term perspective, I think the theme as a whole can see some kind of underperformance or consolidation. So I think even Thomas Cook has been consolidating or witnessing that low top, low bottom structure, which has not yet been negated. Indigo, if you see, go with the airline names, then airlines, Indigo has seen a good correction in the recent past. Now the rising crude oil prices could have restricted price movements on the positive side for Indigo as well. Even if you look at the hotel space, stocks such as Indian hotels have not done well of late. So I think the theme as a whole, definitely 2022, 23, 24, we had seen a good returns coming in from this travel and tourism space. But this last 6 months, we have not seen any kind of fresh buying interest coming in. So better to wait for some change in structure, and at current levels, I would prefer to keep a wait and watch approach.
Okay, prefer to keep a wait and watch approach when it comes to the travel and tourism basket. But before I come to queries, want to get your thoughts on HEG and Graphite as well. Both these stocks have seen a very good rally in recent times. Yesterday they came under a fair bit of profit taking, but today again we are seeing both these stocks making a comeback. In fact, among the top gainers on the Nifty 500 index. Buy on dips, should that be the strategy? And what would you prefer between the two, HEG or Graphite?
Yeah, so HEG Graphite, I think under the stock is trading around its 50-day MA support. 580, 590 seems to be a good support for Graphite. So if that remains intact, then we could see some pullback move back towards 640, 650 kind of levels. Although both these names, we have seen a bit of good volatility in the recent past as well. But these stocks, generally, the broader markets are showing some kind of underperformance. Then we have not seen any kind of that kind of positive price action coming in. So recently we did see some pullback in both the stocks, but again, as last 7-8 days markets have witnessed correction, along with the markets, we have seen some down move again in these stocks such as Graphite and HEG. But amongst the two, Graphite is trading around that support, so we might see some pullback move or positive action over there.
Okay, that's the view on some of these stocks, Graphite and HEG. But let's shift focus to our viewer queries then. There's a query coming in from Amit Kumar Srivastava, and he wants to know your thoughts on the ideal entry point, a fresh entry point for BSE, and of course the target price as well. We know that the SEBI chairman has mentioned that the NOC for NSE IPO could come through very soon. In fact, it is being expected this month itself. And in that sense, we've seen BSE stage a very good run up. We've seen shares of IFCI also seeing a great run up, right? What should be the ideal entry points for these two stocks, and should one chase the momentum that we are seeing on the back of this news that has come in?
Capital market as a space has been showing some signs of consolidation. If you look at Nifty Capital Market Index, since last 3 months, the trend seems to be sideways. Yes, post the announcement that the NSE might get the IPO node very soon, we have seen some pullback move in BSE from the lower levels. But I would recommend if any existing long positions are there bought at lower level, then they can continue to hold on until we see any trend reversal kind of signs. But for fresh buying, wait for some dips maybe in the range of 2700, 2650, so that the risk reward ratio becomes a bit favorable over there.
Okay, that's the view. Hope that answers your query. Let's shift focus to some queries on banking stocks. There are a couple of them. Anil Kumar wants to know whether he should invest in Bank of India or HDFC Bank. And we also have a query coming in from Komal Makecha, wants to know if there is, it's pertinent to make a fresh entry into SBI for the next 6 months to 1 year. PSU banks, of course, have been doing well, but HDFC Bank is one stock that has seen quite a bit of pressure. Since its third quarter update, the HDFC Bank shares have shed quite a lot of weight. So between these three counters, Bank of India or HDFC, which one is looking better for an entry? And secondly, SBI, does it make sense to enter now for the next 6 months to 1 year? What would you advise?
Frankly, if one has to go with private sector heavyweights, then over HDFC Bank, I would prefer going long or recommending long on ICICI Bank, where overall last few trading sessions from the lower levels, a good buying interest has been seen there. Price momentum seems to be very bullish over there. So the downside of the price-wise corrective phase, I think, seems to be over for ICICI Bank. HDFC Bank has not yet given that signs of trend reversal. So above HDFC Bank, going if you want to buy any large cap private sector banks itself, then prefer ICICI Bank. And within the PSU banks, I think SBI could be bought at current levels also. A consistent relative outperformance has been seen in a up move with high top, high bottom structure. When the markets have corrected since last 7-8 trading sessions, we have not seen any kind of selling pressure coming in this stock. So SBI and ICICI Bank, if one has to go with private PSU and private sector, both banking space, then these two names I think should be preferred from short term as well as mid term perspective.
Okay, so SBI and of course the other names that you mentioned should be looked at from a short term to medium term perspective. But there's another query on PNB that just came in from Swaraj. Since we are discussing banks, might as well get them addressed as well. PNB has also shown steady performance. So any particular entry point for PNB?
So it seems to be trading within a broad range. 116 to 128 is the broad range within which the stock has traded since last 3 months. So either wait for a breakout above 128, which would confirm a continuation of this uptrend post a consolidation phase, or if you get any dip towards 118, 116, then the risk reward ratio would turn favorable to take entry in PNB.
Okay, that's the view, Swaraj. Hope that answers your query. I spotted a query from Pooja. She has a query on Indraprastha Medical. She's bought it at 471. Wants to know if it's a good idea to average at current levels. 471 is her buy price and the stock is at 411. Of course, making a bit of a loss here, and wants to know if it can be averaged. The stock has shed 15% to 16% in the last 1 month itself, has been under pressure. Is it good to average now, or do you see chances of more pressure coming in? So should one wait before looking at averaging?
Well, in this recent correction from the highs around 620, the stock has already breached its important supports. So 520, 530 was the major support for the stock, and when that got breached, we have seen a continuous selling pressure in the stock. So when the trend is down, one should not look to average out the long positions. I think averaging should be done only when overall in an uptrend we get pullback moves or corrective phases within an uptrend. So here I would prefer to avoid putting fresh money in this. In case of any pullback move towards 460 kind of levels, the stock would face selling pressure or resistance again. So analyze the stock or take a review again when if you get any pullback move in the stock, whether you should book losses and exit over there. But at current levels, I think you should not look to average up.
Okay, don't look to average at current levels. Hope that answers your query. But there's a query that has come in on the Pharma pack, not getting his name, I think it's Shri. He wants to know, Dr. Reddy's, Cipla and Zydus, which stock is better to accumulate for the long term? Dr. Reddy's in particular has seen a fair bit of pressure. The stock has been, an underperformer, so to say. And Pharma as a pack has also not done all that well. So within these three names, if somebody is looking for opportunities, which one would excite you?
Well, I have a bit different view that neither of these three I would recommend if you are looking for no entering. Rather, if you from the pharma space, if you want to go long within the large cap pharma space itself, then Lupin and Sun Pharma are the two stocks that I would prefer over the mentioned names. So pharma as a space is still into that consolidation phase. Nifty Pharma Index has not yet given a breakout, so it's not the sector where we would see a directional move in all the size or most of the stocks going ahead. But yes, selective stocks which have shown a good strength or relative outperformance, stocks such as Sun Pharma, Lupin, where I think the downside would be limited from current levels as well. Yes, you can look to accumulate gradually at current levels. You can look to buy some positions, and on dips, you can look to add more in this stock. So if you want to go long, then I would prefer going long on Lupin and Sun Pharma.
Okay, Lupin and Sun Pharma, these are the two stocks that are looking good in the pharma space. So all the three stocks that you are looking at, perhaps you could skip those and look at the ones that Ruchit has said. But of course, I think we've addressed most of the queries. There was a query on Infosys which we've already discussed. So Naveen, if you can go back in the feed and take a look at what Ruchit had to say about Infosys. But Ruchit, I want to get your thoughts on GTPL Hathway. Yesterday, the stock was up, in double digits, but then it took a U-turn. We saw 20% cut from the day's high. Today as well, it is extending its losses. Major breakdown here, and what is the kind of level you will watch out for here before calling a bottom on the stock?
So avoid 1 days of moves in such stocks where we have seen a significant downtrend or underperformance. If you look at the stock since last 1 year, I think not 1 year, I think last 2 years the stock has been in a downtrend, and the low top, low bottom structure is still getting continuously formed. So no signs of any kind of bottoming out as of now. So until we see that high top, high bottom structure, a good price volume action coming in, one can avoid doing any bottom fishing in.
Okay, avoid bottom fishing, and of course, one day wonders or one day moves should be avoided strictly. But what's not seen a one day move is Dixon Technologies from the EMS pack. Incessant selling. The stock has shed quite a bit of a weight in the last 6 months. Look at the last 1 year returns, 30% cut. And today, of course, we're seeing some bit of a bounce, but very, very mild. How would you really look at this stock? Is it a time to exit some of these EMS stocks or accumulate them because of the kind of levels that we are getting it at? How would you look at it? Because it's not very far from 52-week lows, $300 away. Do you think that being tested is a possibility?
So the trend for the stock still remains negative only, but just because of the recent correction, the momentum readings are in a bit oversold zone. So we could see in between some pullback moves in the stock towards its 20 DMA, which is now around 12,000, 12,200 kind of levels. So pullback move cannot be ruled out, but definitely because of the broader trend being on the negative side, I think any kind of such pullbacks are likely to witness selling pressure at higher levels.
Okay, that's about Dixon Technologies. What about defense names? They saw quite a bit of a sell-off yesterday. Solar Industries, Zentech, DCX. How would you look at them? BEL, although staged a good comeback today, it was in the green when I last checked. In fact, the market also has broken into the green, paired some of those opening losses. The Nifty now above that 25,730 mark. Midcap is also almost breaking into the green, and the Nifty Bank Index had already broken into the green. But the breadth of the market is now in favor of gainers. 1450 advances to 1100 declines. So there's some reversal in the market breadth. One would take heart from that as well. But we were talking about defense names. What would you do with them? Because of late we saw some selling. Any of these names, and how would you trade into them?
So I think from a positional perspective, one can look for buying opportunities. That space as a whole looks good from a bit mid to long term perspective, especially stocks such as Bharat Electronics, where when the entire sector went through some corrective phase, the price-wise downside were very limited over there. So defense as a space, I think could do well if one has at least 6 to 8 months point of view, then expect some good returns over there. BEL would be the preferred stock where downside should be limited, and in case of any uptrend, good outperformance could be seen.
Okay, BEL looking good from the defense pack. But with that, we've come to the end of the query segment, and we've come to the end of the technical check on the market as well. I would like to thank you, Ruchit, for taking out time and joining in. Always a pleasure, and look forward to our next interaction as well. Thanks a lot for joining in.
Thank you, Nandita.
All right, let's take a look at, just take a look at the sectors that are contributing on the upside. The metal pack has gained momentum. It's up 1.5%. Energy as a pocket is also doing well, up almost 0.8%. PSU banks extending gains from yesterday. The Nifty Bank Index mildly in the green, but what's not doing well is real estate. This pocket has been hammered out of shape. Last year, it was among the top sectoral laggards, extreme selling pressure, and it continues into 2026 as well. IT under pressure, pharma, autos, these are some of the other pockets that are not doing all that well. But on that note, let's bring on board a big market voice to understand how to navigate this leg of the volatility that we are seeing in the market. Ajay Srivastava, CEO Dimensions Corporate Finance Services, joining in. Ajay, always a pleasure chatting with you. First of all, wishing you a very, very happy new year.
Thank you very much. Same to you.
Spoke last in December. But thanks a lot. Thanks a lot. The thing is that, there's been a fair bit of volatility, and a lot has to do with how things are panning out on the trade deal front as well. So Trump keeping the markets volatile. But my question is really, how much importance should one really give to President Trump before making any investment decisions, given the fact that we know how volatile he himself is? So how should you really look at all the noise around tariffs, and also the no signs of actually a clear breakthrough in the India-US trade deal that was being expected? How much importance should one really give to the trade deal now when making investment decisions?
A lot, I would say, not for the reason of just tariff alone. I think this is the US president who's going to reshape the economic landscape of the world. If you look at what's happening in South America, if he gets Venezuela, Colombia, Cuba, Mexico online, that constitutes one of the largest consumption and production blocks in the world. So look at from a capital standpoint. If these four countries come to the table, why would a foreign investor or FDI come to India? They would go straight into the Latin American countries. So don't look at a tariff, because tariff is one issue which is we have to tackle separately. The geopolitical issue is that if we can get these four countries to start kicking in, all four are stagnating companies, all were semi-communist countries. If they come on board with America, the kind of capital they will need and it will go from America will be humongous, and therefore we will have to still compete for capital with these nations. That's the challenge that we are seeing today. Tariff is, yes, one issue, and we've seen one of the, oil, if it goes away, maybe tariff will come down and it will be a cost to one of few corporate entities, but leave it aside. Tariff can be resolved in short term. But four countries in his backyard opening up, that's going to take a very long-term perspective of investors saying, let's go invest in Mexico, Colombia, Cuba, and Venezuela. Why come all the way to India? And, and I have to live in 800 AQI. They have a choice not to live in 800 AQI. So, we're looking at tariff, we're looking at other things, but let's look at what's happening here. Why would a foreigner come and live in 800 AQI cities? Just think about it. If you had a choice and said, listen, I want to set up a plant in India, would you volunteer to go and set it up in an 800 AQI? So we ignore climate, but I think it's the most important factor for anyone to come and invest in this country is going to be where my children are going to be and where I'm going to be. So I think let's put climate first on the agenda before we put FDI and FIs and tariff and everything, because nothing works. Tariff can go away. AQI can't go away. So that's, I think, the biggest impediment is Trump's policies is lots of new countries opening up and we'll have to compete.
Okay, that doesn't sound very good, because everybody was banking on, the FIR return in 2026, given the kind of sell-off we've seen. Of course, it continues into this year as well, but, one was hoping perhaps post-budget or, post some other announcements by the government, perhaps you could see FIRs returning. Also, the fact that earnings, excitement may be coming back soon enough. But tell me one thing, 2025 clearly belonged to hard assets, gold and silver. They continue to, hit record highs because there is no let-up in geopolitical tensions. We've already spoken about that in short. But the hope was that equities will make a comeback this year. What's your sense? Could that happen, or are we in for another rough year when it comes to equities as an asset class?
Oh, it's going to be rough year. It's going to be rough year because for a simple reason. First of all, most people in India particularly are underinvested in gold and silver. And therefore, you've seen what's happening. I saw you some markets today. It's just ratcheting up to a kind which we don't understand, and it's going to happen. That's one. We don't make many of these. We don't make gold in India, right? So we have to import it. And now, the way the Indian market is going and investors are putting in the money in gold has to be imported. It's going to hit our balance of payments. It's going to hit, in terms of rupee dollar parity. So therefore, when you're looking at from an investment standpoint, very self-investment point, and one thing is very clear. In Indian perspective, gold will go up because it does not produce in India. It's imported. It's a matter of custom duty, which is in one day government can impose the custom duty and another 10%. Which I think will happen. Custom duty will go up in gold and silver because you just can't keep importing. At the rate people are plowing in the money in ETF, you just can't do it. These asset class are there for long term. Companies do well, companies do bad. And we just saw one government policy change the dynamics for the auto industry. It was overall year growth is 5%, but December was 26%, right? Just policy determined. Gold is not policy determined. Gold is who goes first and puts his money in the gold and silver ETF at this point of time. And it's in short supply, physical short supply, rupee dollar parity will work for them, and custom duty will work in the favor of investors. So my point is, if you were to look at company performance versus gold and silver performance, one thing you're assured of is limited supply, price goes up, gold, silver is surety. Company performance may go up and down. Like for instance, if the GST went down on autos, they did very well. GST went up on clothing. That company, that part of the business become a disaster. So we are so much into government policy determination changes. Steel was lagging. You got a protection duty. Steel went up by 3-4%. But that's all about it. Because unfortunately, I'm so despondent that India's manufacturing base is shrinking and we are not remaining competitive. And therefore, you see the shareholder returns are linked directly to government policies, not to what companies are doing anymore. Nobody can make money in this country unless you saw the auto companies were struggling till the government reduced the GST. Now, you saw what happened to tobacco companies, right? They were doing fine till the GST hit came and they collapsed. So if you look at that environment as an investor and look at environment saying, TKR gold 1 year will not perform now, but 5 years later down the line, rupee dollar where it is today, and we expect the rupee to touch closer to 100 by the end of this year if this continues at this point of time. Therefore, where are you going to put your money? Let's be safe and be this. It may not be talked about on the channel because all about equity stocks, profit losses. But think about it. If you were to put your money, honestly, where would you put your money? I will ask you the question. You meet all kind of people on the channel. I'll ask you this question for all the viewers from the side of viewers. Where would you put your next 100 rupees?
Maybe I'll I'll ask you that question I'll answer that question offline, Ajay. But last time we spoke, you spoke about diversification into other markets as well, right? Would that thesis still hold? Look at other markets like US for that matter. The outperformance continues, hitting record highs despite fears of an AI bubble. I think right now you could say that the rally in US is getting a little more broad based and diversifying away from those AI names, the 7 AI names, 6-7 IT names that we usually talk about. So would you look at diversifying into other markets, including US, Korea? What have you? I mean, which are the markets that one should look at in that sense if one has to really diversify their portfolios, except for Indian equities, of course, that will also be a part of the portfolio, but other markets.
Okay, it's quite unfair. You make your guests answer all the questions, but you hedge the question and said online. That's not fair question. That's not a fair way. You should have answered the question. But leave that aside. We have been saying just follow 1/3, 1/3, 1/3 principle. You got $100 to invest, put 1/3 in gold, silver, put 1/3 in overseas market, 1/3 in Indian market, and I think you'll be a pretty balanced in terms of your portfolio. As I said, if geopolitics is where it is, if 4 of those South American countries come on board, just think of the potential of consumer demand sits in those 4 countries. Enormous. If Iran goes down tomorrow and Iran opens up, it's a huge consumption market for American companies, whether it is a technology company. Just imagine what we are sitting on today. So, people may say, oh, Trump is whimsical, Trump is this, President Trump is bad. But look at the strategic viewpoint. He's saying, I will open up 7, 8 countries of the world who have starved of consumption products for the last 10, 15 years and technology. And that's the kind of market he's opening up for the US market. And therefore, you have to invest in those companies, because if he opens up Iran and he opens up the whole Middle East, he opens up South America, that's a huge amount of business for the American companies. So therefore, the thesis of American investment becomes stronger this year. Because here is a president who's pro-business. He's not pro this thing. He's taken up all the woke policies. He's taken away all the nonsense which is going around. He's saying, come on, guys, let's go rule the world. We may not like it. We don't like the head of it. But from his standpoint, he's doing the best for American companies. So answer is yes. And Europe. Surprise, surprise, Europe did very well last year. Almost 60% returns on the indexes in Europe. I think they'll continue to perform well because they have now started to look at and say, America is no longer the friend that we had. We need to do something ourselves. So whether it's defense in Europe, whether it's consumption in Europe, industrial machinery in Europe, I think they will pick up. So I think Europe as a group, US as a group, Japan, which has got a brilliant new prime minister. I think she's the first lady prime minister, but she's shaken up the whole thing, taken up the interest rate to positive territory, is going to be a huge market. So I think we have to, and let's not be surprised, Middle East. That stock market is booming. It's just incredible what's happening in the Middle East. I know many people track or not the Middle East stock market, but that's incredible story out there. It's a question is how do you invest? Because you're not given, your allocation is $250,000, including your travel allowance. So you're left to Indian mutual fund, where government has putting artificial kind of, let's put it this way, a quota system to say how much you can invest. So answer is the 5, 6 geographies are opening up. You got to be there. Those are new geographies. Let's say Iran opens up tomorrow again. Just think about the consumption, suppressed consumption in a place like Iran. And they got money to pay, dollar. They got oil, as simple as that. It's going to be humongous. I think we are seeing a global change of a kind we have never seen in the last decade. And may not well for India, but we are talking like investors. I think enormous opportunities on a global scale, enormous.
Okay, enormous opportunity on the global scale. A lot of those new countries open up. Of course, that will be huge. And of course, one should not be missing out on that. But, domestically, a lot has been said on how private capex needs to be revived, animal spirits need to be revived. Of course, GST was one of the, reforms on the consumption side, on the demand side that was opened up. But what needs to happen to revive animal spirits of India Inc.? Anything that you feel that the government should do? Perhaps you could also lay out your budget wish list since you are speaking to us right now.
Wish list is only one, and that's only wish list is privatize PSUs. I think let them float, let them raise capital. They got enormous wealth sitting there, including defense companies, because you're sitting on orders you can't execute. What's the point of giving them more and more orders? If they can't execute those orders, we are suffering on defense. Budget wish list is only one. I hope and I expect that government reins down its capex budget, because a lot of it is wasted in the government. Look at the state of the roads. Look at the state of public infrastructure that given. If at the end of the smart city project I sit in 800 AQI, money has not been well spent. And I think that's the damaging factor, is that the multiple of money which comes out of the government expenditure doesn't give it that much mileage to economy. Indian corporates mileage, annual spirits, oh no, they will never come up, because they are such a cocoon. They are crybabies. They go to the government and they give us tariff protection, give us GST protection. I won't do nothing. I will walk around with the 30 crore watches, but I will not invest in the company. That's the Indian promoter. Dividend is his answer. At the end of the day, long-term capital gains is the answer. Look at the amount of promoter shares sold. It's just incredible. It just seems that no one believes in their company anymore in India. Pragya, just map out. Every single promoter is selling shares at the end of the day. What does it tell you? That they have no ways to invest in their businesses. They want to go buy 500 crore apartments. They just want to buy 30 crore watches. But come back to capex, they don't do it. So I think government's got to take a very hard stance, if you ask me personally, with these promoters who are selling shares. Get the mutual fund out, say you will not buy shares from these promoters. I think that's the biggest thing government should do. Budget wish list is only one and only one. Privatize, privatize, privatize. India needs it. And just cut this nonsense of giving benefits to everybody in the world for long-term capital gains. You've given it to Saudi Mutual, the corporate fund, the sovereign fund of Middle East. How much money came in? Nothing really came in that. So I think we have given too much benefits to everybody. They are taking money out of the country tax-free. Our companies are starved. So I think we need to penalize, in fact, our promoters who walk up to the finance ministry every time, say, give us benefit, give us protection, give us GST cut, and says, what have you done about it? And I think as public, conspicuous consumption should not be rewarded in terms of shareholders. I think that's the most important part of that. We have to say that, come on, invest in this country if you have to grow, for God's sake. I think that's more important. And animal spirits don't come up when you create a comfortable environment. Your dogs in rich houses don't just go for walks also at the end of the day. One day will come, there'll be a machine to make them walk. Forget animal spirits. We are a lazy country, just dependent on government for everything.
Okay, quite a few points you made, and interesting ones at that. But, coming down to investment decisions, right? Comfort of large cap, or the joy you see when mid or small caps that you invest in give you returns on a consistent basis. What would you look at right now for this year?
Pedigree of promoter. As simple as that. You just map it. It doesn't matter large cap, mid cap, small cap. You just have to look at the pedigree of promoter and you will be fine. If you look at the gold call companies, which is the best gold loan company? The oldest company with a small pedigree. Look at autos, which is the best known companies in auto even today? The pedigree companies at the end of the day. The new guy who came into town fooled everybody, and look at various share prices at the end of the day. So I think, this is not an environment about large, small, mid cap. Just go with, they're very mid-cap, small-cap engineering companies, very good promoters, and they're doing fine. You don't invest in them. But so my logic is very simple. Time-tested, credible promoters, honest promoters, is where you put your money. It's not about large or mid-cap. Number two is, India gives you an offer to invest in duopolies, whether it's stock exchanges, whether it is telecom, whether it's hospitals. I think, just go for sectors where the competition is less, because that's where you make the mega bucks. It may take time, but you take mega bucks. So we got capital market sector, we got telecom sector, we got hospital sector, where there are not many players at the end of the day. And therefore you got the comfort zone to say entry barriers are high. Same is metal story playing out. Pragya. You can't produce a mine in not less than 20 years. These companies are going to make the kind of money which we have not even seen. It's what has come in the last 5 years, nothing compared to what's going to happen in the next 10 years. So whether it's metals, whether it is stock exchanges, whether it is hospitals, whether it is telecom, all these duopolies or monopolies are going to make money. And credible promoters, map it, which is the best performing auto stock in 10 years, is one of the oldest stock. I can't name it, but you can make it out. Okay, such a smart promoter, never sold his share ever. Just think about it. The largest company in India, auto guy, Growth, never sold his single share. That's what companies are all about. That's what you build nations, not the guys who sell the shares. That's why I said selling shares promoters, I don't like them. You don't believe in your own company, my friend, and why you want me to invest in the company. And our mutual funds, have they ever questioned the promoter? You are selling off all your shares. Your capex is next to zero. Why am I buying your share? But it's free public money, so give it to them. And I don't like it. I like promoters who just want to build their companies. Beautiful companies, shareholder returns. What else do you expect? Go for pedigree. Go for such promoters who don't sell the shares and build their companies. Forget about large and mid caps.
Okay. All right. Pedigree and promoter, the quality of promoters, that's crucial, of course, when investing. But, last couple of questions then. We've time and again spoken about quick commerce and how, of course, that's the future and that's how we've started living, right? 10-minute delivery. But, yesterday, of course, the Labour Ministry, directed some of these quick commerce companies to drop that 10-minute tagline. How crucial is it? Because, that's, do you think that's just optics, or do you think that would have any kind of impact on the profitability of these companies? How are you looking at that? Would it have any impact at all financially?
Did you say profits, Pragya? Did any of the companies have any profits at all? So,
no, profitability timeline, does it get...
I heard the word.
And I would like to correct you, Ajay. My name is Nandita.
Nandita, sorry,
Ajay, you're speaking to Nandita.
I
think you got my name wrong.
Okay, sorry.
And secondly, what I meant, profits, I stand corrected. Sure. And in terms of profits, I stand corrected. I meant the path to profitability, does that get deferred even further? I stand corrected there.
I've heard the word profit. I said even the company never heard of the word profitable. Okay, and the path to profit, I can promise you, I know these two companies, it's all for the investor. There is no path to profitability. There is no path to profitability. It's a very beautiful service. I love the service. It delivers value to us. But whether it's a path to profitability, now you got Amazon also jumping in and saying, quick, Amazon now has jumped into it. Sooner Flipkart will jump into it, and it's going to be a 5-member, horse race going on. Where is the path to profitability? Can one even see it? It's so foggy out there, you can't see that. So I don't think it's, it's optics. They had to agree to it because of all the government pressure saying, traffic violations, people, quality of life, people are getting stressed. Yes, all right. But at the end of the day, business models don't go away by government dictats. You may not advertise it, but you'll try to meet the guidelines in 10 minutes or 15 minutes or whatever. I think that's not material. Material is going to be what you just said. Is there a path to profitability? And I'm saying to you, two big giants are coming into public markets very soon. Amazon will come in very soon. You'll watch. Flipkart will come in. They'll raise another 50,000 crores of capital and will deploy in this country. There is no path to profitability at the end of the day. It's all paths to where you invest and where you exit. Forget the profitability. It's all going to be market momentum. And till the point, India has a festival in North India, Lohri yesterday, which we burn. And I don't know why we burn with 800 AQI, why the North Indians decide to celebrate. I've never understood this yesterday, which is so stupid. We are at 800 AQI today. But these companies are Lohri every day. Every day they come and burn 200 crores of cash and tell you it's the greatest business model in the world. Well, we will see. Time will tell whether its investment makes sense. But I never knew of a business model where you burn 100 crore every day and says, I have a path to profitability. There is none which exists. So investors, beware, enjoy. 300 may become 350 for some share. You book out a profit or so low losses. But remember one thing, all investors of these companies are selling. Promoters are selling, Indian mutual funds are buying. Is there another recipe for disaster? If they saw a path to profitability, they won't be selling their shares, my friend. So they are selling, they know internally what's happening. Indian mutual funds are blissfully unaware what's happening down the line. They're buying a theory of path to profitability. In my view, Nandita, none exist.
Okay, none exists. Okay, we'll of course have a longer conversation on that later. But just to sum it up, if I were to ask you about some of the structural growth themes that could shape the next phase of wealth creation over the next 5 to 6 years, anything that comes to your mind, and could you just list out 2 or 3 for us? A very longer term, 5 to 6 years, not 1 or 2 years.
I'm just saying, stick to the allocation is one thing. That's most important. Don't worry about market gyrations. Prices can go up, down. But if you stick to your as an Indian investor, one third, I think you are perfectly positioned for enhancing your wealth over the next 5 years. That's the most important thing. Most important thing is, please go for India offers enough opportunities where the duopolies, including stock exchanges, etc., which offer a pretty good runway and no competition at this point of time. And if India has to grow, it's going to be the place where the maximum money is going to be made. Not going to be the AMCs, it's going to be the stock exchanges, because there's one new AMC coming up every year. So I think stock exchanges, telecom, the duopolies, monopolies, please stick to the theory about it, that's where the money is going to be made. Pedigree promoters do not give up on the shares. They may look unexciting. They may look very, very unexciting, but they will give you the best return that you can at this point of time. India will be a gold's paradise, and gold loan companies will remain for the next 3 to 5 years one of the best ways to invest into the financial markets. They will grow best, most secured lending, and you can't go better than that one. So I think if you structurally stay with these themes in India, with your metal theme on the other side, and you see on the overseas markets, I think you should be fine in this market. 100% reliance on Indian equity is going to be a problem for most investors, and they will see suboptimal return as they have in the past couple of years.
Since you mentioned stock exchanges, we have the NSE, NOC for the IPO coming through pretty soon, as was alluded to by the SEBI chairperson himself. What kind of value unlocking do you see that this IPO could lead to for banks, insurers like LIC that have a stake in NSE? And secondly, would it be fair to assume that NSE will be a multi-bagger? What kind of returns should one expect over the next 3 to 4 years? I mean, if you could share your thoughts on how you look at this NSE IPO and what kind of wealth creation it could lead to, if you could share your thoughts on that.
Okay, for disclosure, I have an investment in that, a decent sized investment in NSE. So for public, so obviously I feel positive about it. I feel great about it because it's a great platform in India. Most people gravitate towards NSE. And, as I said, you'll have years of regulation changing the volumes. But look at a longer term trajectory. How many million people invest in this country? And just algos have just opened up. That will give a huge fill up to this industry. Algo business can go between various brokers, but at the end of the day, it ends up in a stock exchange. So I think given the path of how many more hundreds of million people still need to come to the market, given the fact algos is just opening up in the current 2026 compared to the US market, given the fact short selling is still not allowed in Indian markets and cash shares, the volume which we can see is tremendous. And I think the government has sensibly held its hand, SEBI, to say no more regulations to control futures and options. Let people do what they have to do. You control the regulatory. Don't let institutions misuse this thing for making losses. Let people make decisions. If they can make decisions, as I said, keep saying, to marry and to produce children and do all kind of stuff, I think they can decide to buy a stock options at the end of the day. So I think the runway is huge. There is no competition. There is one more exchange coming up, but we all know it takes enormous time, like a mine, for a new exchange to acquire credibility, customers, and so on and so forth. 2 exchanges rule the roost, and therefore NSE is, of course, the prime. 75-80% of volumes come through one exchange. But for disclosure, I have investment. I want to keep it. When it lists, we will see how it works. It surely has all the trapping of a multi-bagger. It may take longer, shorter, depending on how it opens up in IPO, but you can't have a better bet on Indian market than this stock exchange.
All right, that's the view then. Ajay, would like to thank you for taking our time and joining in. Always
thank you, and my apologies to you.
Different perspectives and no worries at all. Thanks a lot for joining in. I always enjoy chatting with you, Ajay.
Thank you, same here. Likewise, enjoy.
Thanks a lot. Thank you. Well, on that note, let's shift focus to the market and see what we are doing. Extremely flat, but we are still trading with a negative bias. We've reclaimed the 25,700 mark, and the breadth remains in favor of gainers. So, let's see how really things pan out, because it's expiry day again today. Sensex expiry, back-to-back expiries. Fair bit of volatility was anyway expected. But the good part is that we have, paired some of those opening losses, and we're just about flattish right now. Bank Nifty marginally in the red, and moving in tandem with the rest of the market. And if you look at some of the movers on the index, you have Axis Bank, that's topping the charts, just about 1.5% gains, but that's the top Nifty gainer. Some of these metal names are featuring on the gainers list, including the likes of Hindalco. Power names like NTPC, even BEL has staged a good comeback today. Max Healthcare, HDFC Life, these are some of the other gainers. On the flip side, Pharma names are out of favor, the likes of Sun Pharma, Cipla, among the top laggers. Wipro, that's also trading in the red, despite the fact that the Nifty IT index is trading in the green. Kotak Mahindra Bank and ICICI Bank are under some bit of selling pressure, and some of the consumption names like HUL, Tata Consumer are also under a fair bit of selling pressure. But take a look at some of the mid-cap movers as well, as to which of the stocks are doing well on the Nifty 500 index. It's MMTC that's rallied almost 8%. Hindustan Zinc, silver of course hit a fresh record high last night once again. So Hindustan Zinc, that's up another 5%. BLS International up 4.5%. Vedanta from the metal basket is up almost 4.5%. Graphite, HEG, these stocks, after the kind of sell-off they saw yesterday, they have staged a good comeback. Hindustan Copper also up another 4%. Maharashtra Scooters, GE, Vinova, HFCL, Laurus Labs, LIC Housing, these are among the other gainers. On the flip side, Kalyan Jewellers, that's out of favor today, losing some shine. That stock is down 3.5%. Asahi India, Tata Elxsi as well post its numbers, it's out of favor. Prestige Estates from the real estate pack, 2.5% down. In fact, the entire real estate index itself is the top laggard. Swiggy is down 2%. And, names like Lodha Developers, Federal Bank, Phoenix Mills, are under pressure in trade, and they are among the top laggards on the Nifty 500 index. Well, that was opening bell for you. Thanks a lot for tuning in. Of course, I'll see you with closing bell at 3 p.m. We'll take stock of the day's action, and of course, we'll get you insights from market experts as to how to navigate the market for the rest of the week and the coming weeks. But also, Infosys will be on our radar, reports numbers post-market hours. We'll get you coverage on that as well and decode the numbers for you. But that would, of course, happen later in the day. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and we'll see you in just a bit.